Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, and welcome to Forecast Update Live, a video series from EverAg Insights where each month we gather to discuss our dairy market forecast. I'm your host, John Spainhour. We're joined today by Erica Medke, Matt Gould, and Phil Plord. To get us started, Erica, give us a rundown of this month's forecast and how it may have changed from last month.
Hi, John. Thanks for having me. Happy New Year to you and to our audience today. Our forecast has changed mostly on the cheese numbers. As we look at the first half of 2024, we are seeing a slowdown from our expectations in terms of the amount of exports leaving the United States. We think that's going to push things a bit lower here back domestically. As such, we've taken our numbers down somewhere between nickels and dimes even for some of those months, really taking a whack to that first half. The other change is just cleaning up the nearby in butter. That's up a little bit. Other than that, the forecast remains largely unchanged.
Thanks, Erica. Every month we take the opportunity to let one of our panelists take the bull perspective on the market and the other to take the bearish perspective. This month, Erica has agreed to take the bearish perspective. Erica, take it away.
So as we think about the factors that influence markets coming down, there's really one big one, and that's demand. Now, as we think historically, demand for dairy products is on a general uptrend, a growth of 1 to 1.5%. So it's not like we've completely fallen out of bed in terms of demand, but we certainly are off that historical pace. And part of the challenge with demand is not just that depth, that how much we're off, but it's also the breadth. That as we look, not just here in the United States, but around the world, we are seeing soft demand. We look to China, some economic malaise there. Demand is certainly off. Imports are down as we look to China. Europe is another big nation states there. The European Union is also feeling a lot of pressure from multiple years of high inflation. Consumers are pushing back and saying there just isn't enough money left. And we're seeing less dairy consumption on the continent. Also seeing challenges in Southeast Asia, some places in South America. It really is the globe that is a bit off in terms of overall demand. As we think about the American consumer, seeing a huge mountain of debt pile up as inflation has run high the last couple of years. People have done what they can and they've been resilient in their spending. At some point, that piper will have to get paid, and we think that time is coming very soon. Already, we've been seeing demand slow down, hearing comments from major retailers, whether it's Walmart or Home Depot, looking at big pizza chains, a big user of cheese, looking at that general sense of demand slowing down over the last couple of months and anticipation for that to continue into the next calendar year. So with that, one of the things that I'm really watching as a global indicator is crude oil. We've seen that definitely struggle to get over $80 a barrel. And I think that speaks generally to the economic health or lack of health around the globe. And so to be watching that as a driver underlying economic growth that hopefully will spill over into dairy demand.
Thanks, Erica. Matt, you've agreed to take the bullish perspective this month. Take it away.
The bullish perspective is really focused on the lack of supply globally. Production is declining in the U.S. and it's also declining in Europe. In China, we've seen a massive slowdown in growth of supply. And just from an overall global level, when you add up all the different regions, we're currently down. And when we look out, especially the first half of next year, we expect those declines to continue. In an environment where we're not even low growth, we're actually declining. It's hard not to be bullish. Even if we had demand return closer to trend, we obviously don't have enough supply globally to fill growth. The bullish perspective today is really focused on that lack of supply. And the lack of supply in some commodities is perhaps showing its head. We are seeing strength in global butter prices. We're also seeing strength in high protein whey prices. And I think there's a good supply side argument to make that lack of supply is supporting markets. If you want to get extremely bullish, it would have to be an argument that says demand is improving relative to how it's been and supply is just, status quo. We don't have enough.
Thanks, Matt. Erica, on your side of the argument, we would say that demand is suffering on a global perspective right now. And Matt, we would conversely say that supply across the world is either stable or shrinking. Put the two together, and right now it feels like, from a price perspective, the demand side is ruling the day, as we're seeing several of our prices at recent low levels. Thanks, everybody. Phil, every month you bring us your favorite look. Take it away and let us know what you're looking at this month.
At the risk of playing favorites and piling on to Erica's side of the argument, this month's favorite look does concern demand, specifically focusing on U.S. retail demand for various dairy products. Data from Circana year to date through early November shows cheese demand at retail down about 1%, fluid milk demand down more than 2%, ice cream, frozen novelties down as well. This graph is ordered according to segment share, and so it's fun to say, oh, look at that, cottage cheese up more than 7% year over year. Nice to see that TikTok influencers can carry the day, but overall, cottage cheese is less than 2% of the retail pie for dairy. So you have some areas that are showing some growth, like refrigerated toppings as well, but they're not enough to move the overall needle. When we kind of dollar weight all these numbers, we figure that retail demand is down somewhere between 0.5% and 1% year to date. And that just speaks or illustrates the story that Erica was talking about.
Thanks, Phil. I always think you do a nice job bringing that unique look to us. Okay, that'll do it for this month's edition of Forecast Update Live. Thank you to all of our panelists. Thank you to everyone on the EverAg Insights team for their work on the forecast. And thank you, the viewers, for tuning in. If you don't receive our forecast update and would like to subscribe, please reach out via email at insights@ever.ag. If you like this video, be sure to subscribe to our YouTube channel, give us a thumbs up, and share with a friend. We'll see you next month and next year for another edition of Forecast Update Live.